Hello and welcome back to another episode of Fintech Focus TV with me, Toby Babb. Today we welcome back to a long-time friend of the show, Roy Saadon. How are you doing?
Fantastic, Toby. Thank you very much. It's always a pleasure to catch up. So thanks for having me again.
It's a pleasure to have you back on as well. And it's been great to see Access Fintech in the headlines. You know, more and more, it seems every time I'm picking up the trade press at the moment, there's something there that you guys are announcing. And it was actually a headline that caught my eye with regards to a partnership with Capco. And we'll unpack that in a little bit. And I love at the moment on this show being talking about more and more people who are looking at solutions and combining and partnering to solve industry pain points. So we'll come into all of that. We'll look at the journey of Access Fintech and what you guys have been doing. We'll talk a little bit about the industry and the consolidation we're seeing and what that means for the space. But there's loads and loads of stuff that I'm very, very excited to back into. But despite the fact you are one of our most regular guests on the show now, and I'm sure everyone has seen this face and knows you well, give us a quick insight into Access Fintech and what you guys are doing at the moment.
Yeah, so anyone who has been listening and tracking specifically the conversations we're having, the both of us, because we speak about every 6 months, 8 months, you can see the evolution of the story because you see it at such big intervals. So our story keeps evolving, which is great. The fundamentals are the same, but understanding what we deliver to the market, that evolves the whole time. So we always spoke about data collaboration and workflow collaboration and how do you help the industry evolve the way it works with each other. But today, I actually start the story quite differently. I said that what we've achieved is create an industry-wide data lake that services the participants to work with each other. So we've created a data lake that specifically helps people collaborate on data, collaborate on workflow. They need a trusted place that they know that they can control, safeguard, yet collaborate on what they do. And what we've done over the last 4 or 5 years is create that exact same idea. Now, what we sell to the market is the usages of the data lake. We do it now in settlements, we do it in payments, we do it in loans, we do it in CSDR. But the fundamentals have gotten to the point that we kind of stopped and took a step back and realized what we have done is created a secure place for members to share data with each other, with all the controls that they need and all the structure and all the indexing and linking, and just creates a place that I can work with my other participants. So it's a very exciting realization that, what you used to tell as a story that was very long, today I just go in and say, with the industry data lake, this is where you come in to collaborate. And from here, we just unpack this value proposition, but it becomes a very concise and an easy story. So yeah, it's very exciting with the industry data lake.
And that's really interesting, isn't it? Because you say, as you've gone through the sort of evolution over the sort of every 6 months or so that we've been talking, there's massive acceleration of your proposition and where you're at. And I was speaking about this with another company recently about how a business goes from a sort of startup to having your early adopters to then sort of becoming more mainstay. This now becomes almost an inevitability. You look at a business here which becomes a no-brainer for people to do it. You've got a proposition there that's very, very clear, probably in one of the sexiest areas of the industry at the moment. And I guess that the principal thing is just how people use it and how you help educate and move those customers through the buying process to recognize that there is real value to what you're doing and in the marketplace. And let's go back to what we spoke about in the start and this whole Capco piece and how that sort of comes together as well, because I think it's really interesting. We've seen, as I said, a number of different partnerships of people saying, right, how do we look at the problems that customers are having and help them on that journey? How do we lubricate the process and make it as easy as possible, remove the friction from the process with it? When we spoke 18 months or so, it was very much the eye of the storm in terms of what was happening in the marketplace. We were seeing an acceleration in digital transformation within financial services that we hadn't seen at any sort of similar velocity, possibly in the evolution of the industry, going back to probably the rise of electronic broking is the first sort of phase of it. So it's a really, really interesting stage. And with that maturity, comes growing pains. And with growing pains is having a teenage son whose knees are aching all the time at the moment. You see those sort of things coming through, and it's an interesting maturity cycle that we're in at the moment. Tell me a little bit about how you recognise that, how Capco come into that, and where the whole market sits at the moment in terms of this evolution.
I think there's the evolution of the company, there's the evolution of the market. If you are really lucky and you don't control it, they happen to coincide, so it really becomes a multiplying effect, because the market evolution and yours kind of coincide to a much bigger impact. When I think about the company, I think of it in the context of a nice to have. We like what you do. If this works, it's going to be really impactful. Right now, it's like I feel whether I want to try to use it or not as a buyer is my decision. It hasn't yet. It's got the promise to change, but the journey is complicated. And you get to the point where you become a must-have. There's enough credibility or enough volume or enough client base or enough evidence that this really works, and that change to a must-have changes the conversations that you're having. So we've definitely, as a company, changed from nice to have, or the idea is promising, to the point that we have much more like a market infrastructure. When I'm outside looking at this network, I think it's more painful now to be on the outside and losing value than be on the inside. At the beginning, we needed people who were happy to be in a painful stage of building this, and not everyone is built for that. You need the early adopters. Now I'm at the stage that this becomes a must-have, and there's really clear value. And so you have that tipping. The industry for me is going through the same thing. The whole view of fintechs, or moving to technology, or letting go of some of the services that I thought I had to build and manage, or moving to the cloud, are all part of the evolution and the readiness of the banks and the buy side to look at our stack and say, okay, what can I use, right? So when I think about Salesforce, moving all my client relationships to a cloud took a long time, but now if you take it for granted. Look at Workday, my entire infrastructure for kind of HR and management and resource, and it's like, it's there now in the cloud. I do it, but when it was my proprietary business, I'm a bank. What do? It's a much, do I put it on the cloud? Do I put it on the shared service? What's my connection? But you chip at it over time, and now the market is actually looking proactively, and the banks are looking proactively as, what do I need to own? What do I put outside? When I do it outside, can I do it on a shared service? Can it be on a SaaS model? The acceptance of SaaS, the acceptance of cloud is completely different. So the market's really eager to make those changes. They're being almost measured by analysts on their ability to adopt those technologies. I've reached the tipping point where I'm a must-have, so I'm a credible provider. Now the next barrier is the change. It is hard to change. So if I'm a bank, I've got legacy clients, legacy behaviors, infrastructure. I don't just flip a switch and say, okay, I'm going to turn this off and move over there. It's complicated infrastructures and other activities. So then the banks need help to do that. If they come to me for help, it's hard for me to be a tech company and also be an advisory or a consulting. I just don't have the skill set, the depth, the capacity to do that. I don't get measured on the success of that. So, a partnership with Capco allows them to come in and help the banks in that transformation. The transformation is about making sure you make the right choices on technology, that you understand how to rewire your workflow, to understand how you manage the process of transformation. There's a significant task and a significant risk. If the transformation doesn't work and the bank doesn't change its behavior, I end up being a tax. I'm just more cost added without any change. So net, there's no ROI, even though the potential is there. So there really is appetite to change. Now, how do I be successful in doing it? Guaranteeing the success, you go to an external partner, you go to a Capco and you say, listen, I need help in doing it. What's also great is it's no longer just the system integration side where people say, I've got a project come in. The advisory company will come with an opinion. They've already looked at fintech companies. So if you're looking for change, I may come in with an opinion saying, well, if you're going to change, you should look at a full suite of products that we've secured in the market and looked at or analyzed. We've got 5 or 6 companies that work with each other. Let's make a bigger change and make it more impactful. So again, I talk about our maturity. I talk about the maturity of the firm wanting to change, and then the guarantee to the success is the partnership with a Capco who sits with one foot servicing the bank and the other one helping us making sure that this implementation is successful. So it's an important piece of the transformation that people take for granted.
And it's an important decision from you as well, right? Because that's a sort of investment of. There's two aspects of that. One of which is it's a brave move to say that there's a number of companies there which I think, right, we want every piece of the pie. We'll go into that. We'll be greedy about doing that. There's a revenue stream there that quite feasibly you could build a professional services and consulting business that taps into it, and you can say, let's do that because that's money on the table that we can go. Is that necessarily the best way for you to build and grow your business? Is that the bit there which you do really well? And I think it takes a brave company sometimes to say, look, let's make the main thing and be bloody good at that. And that's that's clearly the thing you've taken. The second bit, which I'm interested in, is there's a number of consultancies out there, and those consultancies who you're recommending with the client at the heart of your issue and your decision making, you're saying we've got to get that right as a partner who's going to help our clients embed this into the best possible way and make the right decisions around that as well. So tell me two things. First and foremost, how did you choose the right partner for that, and why Capco? And secondly, talk to us about the decision making to say we're going to keep the main thing and not try and be all things to all people.
Yep. So let's start with the second one. There's selfish number crunching. We don't know how to charge properly for professional services. Small companies don't. You often lump it as part of the implementation. You want the deals. I'm a small company, whatever it takes. You want professionals, I'll throw it in there for free. It actually hurts the bottom line performance of the company because it eats into our margin in a way. And I'm a money losing company, right? I just don't have the discipline, because professional services is a lot about discipline and the know-how to price it properly. So that's one thing. That's like just a pure numbers game. The second thing is change takes time. The commitment that you have to make sure that the banks or the buy side goes successfully through the change process is really going in and understanding not just what does it take to implement Access Fintech, what are the changes in the other parts of the organization? Listen, if you're doing this, you need to change some behavior in the front office. If you're doing that, you need to change some stuff on the documentation you have with clients. If you're doing this, you're moving to the cloud, you need to change the way you think about where you source data. That is way beyond me implementing Access Fintech and saying, listen, I'm going to build 2 pipes, consume data. I've done my delivery. The organization hasn't changed yet. So I don't have even the depth in it. I'm focusing on building technology and making sure that it delivers what it's meant to. Understanding what the impact of change is bigger. The cost of the change is bigger than what I license. It's not like, hey, another 20% of professional services. That could be threefold what we sell. It could be tenfold what we sell, but it's a much bigger change that the bank is doing. It's typically part of a bigger 3 or 5 year agenda about moving to SaaS. And this is a step in the journey. So it's not about doing that. I actually retain a lot of the traditional professional services, which is about making sure that the system is up and running and working. What I don't want to do is do the change on behavior. So I'm drawing the line, on a SaaS world, with today's infrastructure, the actual pure technical implementation, I'll probably do it quicker and faster until I just run out of capacity and I want partners. But the change surrounding the whole thing, what do you as a bank have to think about when you deploy this, is a bigger remit. You have to come in with an agenda. You have to say, listen, I can take you by the hand and help you do that activity. So it's much more than what used to be. The heavy lifting used to be about deploying the software. For me, the heavy lifting now is the actual behavioral change to make sure that the adoption of this new way of doing things is successful. So that's a classic advisory piece. Yeah, and you had a second part of the question. I don't find that it's us picking. I find that it's actually the Capco picking us and saying, there are many companies out there. I need to have an opinion of which companies we think are best suited for this transformation piece. And as such, come to us and say, listen, we need that to be part of the stack. We want to invest time in it. They're the ones investing time in understanding what does it mean. And when they go through the process, they go, no, this is something that's a core part of what the transformation is. I think they come to us and say, listen, we want to be able to deploy this. So again, it used to be very, very different than when I used to go and buy a massive system that cost $100 million. Now we're talking about a combination of systems, and it's a full stack, and they're at a fraction of the cost, but that stack needs to work with each other. So the advisor has to have an opinion of what the stack looks like. It's not just whatever you the bank want. I'm going to help you with that transformation. I've already pre-picked a few that we think are part of that important stack. So I think it's about them choosing us, but we still have to support that, and our product has to be mature enough, and we have to be able to make sure that we give them enough information. So I'm not saying it's like, hey, they picked us and we're done. We have to do things to make sure it's successful. But I find that it's actually the advisory companies see that the change is happening. They want to be in there. They want to come in with the components that make a successful change. And we're just lucky enough to have been picked by them as something that's really important.
Well, I think it's a very modest way you put in that, because lucky enough is generally because you've spent a lot of time building a product that, as we've just been talking about, becomes inevitable in businesses looking in the space. So I'll give you some props there if you're not prepared to do it.
It's not all luck. Listen, it's blood, sweat, and tears, definitely, right?
Absolutely.
But I don't think we're the only ones. I kind of put the lucky enough is we've gotten ourselves to the point that we could be considered, and the lucky enough is that we actually managed to get the story right. The tech is, you have to get the story right. So I'm really happy that they saw what we do and they said, right, this is actually something that the banks do, and we want to roll it out.
So let's look at this from a buy side and banking perspective. I'm sat there and I'm looking at the advantage that this now gives me. When I'm sat there and I have Capco working, hand in hand with Access Fintech, what's the benefits to me, and how does this sort of, because I know how customer obsessed you are.
Yeah.
When you're looking at this in terms of your customer, how does this become such a real benefit to them?
Like I said, the implementing the technology is not the hard thing. It really is open heart surgery to figure out how do I behave differently in the SaaS world. And I'll give an example. By creating what we have created, we've created a place that the banks now have a shared portal where they are going and servicing the clients jointly. If this conversation would have been 5 years ago, listen, you've invested a ton in your single bank portal, but really it's about shared servicing because clients deal with all of you and making sure that they are able to access data and move to self-service. You will never get the buy side to move to self-service if every client services differently. There has to be a collaboration. That is a big thought differentiation or a conceptual change that the industry had to go through. And when it finishes the transition and saying, okay, now I want to do that. Okay, doing that is not just getting Access Fintech. Doing that is looking internally, where you spend your money, how do you spend your money, what are the efficiencies, what do you do differently, can you stop doing, how do you still retain what's differentiating so you don't lose that client relationship, but share the costs where it's a completely standardized, commoditized part of the life cycle. And this is the part where, again, I think the consulting companies come in with an opinion and saying, differentiating, non-differentiating, keep that, change that, rewire. My software hasn't changed. The data that I need doesn't change. It's that what do I do differently after I've implemented as a bank is we're not in the business to give them that advice, and you get Capcos of the world to do that. And I have to say, when I talk about lucky enough, I would also say what I'm really excited about Capco is they're investing the time to do that, but banks may have strategic partnerships with others, and then the conversation is the same. Listen, that investment in time is not limited to, but I always say that the guys who move first, the guys who invest time, have a that headway and being able to build the knowledge and have an understanding of what it is. So, yeah, excited about the partnership.
Yeah, it's I heard something the other day about not being necessarily the first, but being about second or third in is always the best place to to join up, isn't it? I find this really, really interesting because rewind 18 months, and it was a very interesting conversation about the sort of people being very entrepreneurial about seeing opportunities and sort of reacting very, very quickly to that, which in turn saw mass cloud adoption, a 5-year acceleration in 5 months in terms of where everyone was sitting, and everyone having to change. Change happens because either it needs to happen because it's hurting too much to do it, or it's being forced upon you with the potential of it being a much better world that forces that sort of change. Otherwise, people sit in that status quo. We've had the world shaken up, which in many respects has led to far better and more positive business scenarios for people. People have taken the negative and very much turned it into a business positive in terms of whether they go, yourselves included, who've had just a phenomenal couple of years that I find massively inspiring every time I speak to you about. But I think it's had an interesting sort of knock-on effect to the whole fintech space itself. And I know you've got some thoughts on this. We've seen a lot of market consolidation recently. We've seen a change in shape. We've seen some of the big players making some moves. Recent things that we were talking about beforehand off camera about Broadridge and Symphony and numerous other things beforehand. Last week we had Mark Beeston on the show talking about what's happening with a lot of positive news in his portfolio, and we've seen a enormous amount of investment in businesses that you wouldn't have picked even 8, 9, 10 months ago, where everyone was still being a little bit cautious with their money. Businesses there who've got a real thing, people saw opportunities to invest in, but that's sort of rolled on. You've had some, we spoke about last time you were on the show, I think the huge thumbs up and pat on the back and credibility that you got from the investment you got at such a difficult stage obviously speaks volumes about your business. Tell me a little bit about what this means for the fintech space. Tell me about what the market consolidation is pointing towards and a little overview of the industry.
So first of all, I'll start with a shout out to my good friend Gil Mendelsis, CEO of Capitolis, who just yesterday announced that they're acquiring L Markets. So you see companies younger in the life cycle doing transactions. And then we can see what Brad Levy is doing. I think he's already announced 2 major transactions for Symphony. So still what you think of as a new age company, but they're already at that stage where they're doing transactions. Then you look at Broadridge, who've announced, I think, 3 major transactions since the beginning of the year. So there's a lot of activity that is happening. Some of it is consolidation because of incumbents consolidated together. Some of it's going to be an aggregation of fintechs, but I think it's all still a testament to the same thing. People are realizing that the fintech activity is actually beneficial to the industry. I always called it Fintech 1.0 was, hey, we're going to replace the banks, we're going to replace the financial system, it's all broken. Fintech 2.0 is, listen, you got infrastructure, you're a business. If we can improve the business, let's talk about how it gets better. So when Fintech 2.0 is here and it's less threatening and it's a disruption, which is a constructive one, I think there's a lot of interest and appetite in doing things. And you get to the point where, okay, there's a lot of these, and who are the winners? And I think what we're seeing is a game of picking winners. So, okay, who the winner is? Okay, if that's the winner, I'm going to get a bigger company showing real interest in that. If I'm a bigger company who's an incumbent and I want to innovate, there's enough mature stuff out there that I can speed my innovation by acquiring it. Now, again, 2-3 years ago, you weren't sure if you're acquiring a company that's not going to make it because there were just so many of them. But I think so many have crossed that boundary where they become credible. They're nice to have versus must have. There's enough of us out there that classifies the must have, and now they're definitely piquing the interest of through M&A, because people want credit, people want to buy innovation, they want to own innovation, they want to partner in innovation. But it's driven from appetite, I think, from at the end of the day, the consumer who's buying it, the banks, the custodians, the buy side, they're ready to start digesting and consuming those activities. It becomes really appealing.
Do you know what? I think it's very interesting, isn't it? Because I haven't thought about this since you just sort of mentioned it. Probably over the last 5-10 years, I've spoken to a number of fintechs who went in very much with that sort of fintech 1.0, the view of this is about disruption, this is about us against the banks, and the conversations we were having in the very early days of debates I was hosting and events we were putting together, were people saying, right, this is us against the banks. Then saw the opportunity and said, right, this is a challenge, how do we collaborate? And it became much more collaborative. But what we also saw at that sort of stage was a number of fintechs who were coming out, and this was something I saw time and time again. Clever people with clever solutions that didn't necessarily provide solutions, that whilst however clever they were and however technically innovative and challenging and brilliant they were, they didn't answer the problems that were really going to accelerate growth or remove friction or save cost for those businesses. They were just clever stuff that was almost like another bolt-on. And I don't know if it's the sort of opening up of the API world, or a different level of thought, or iterations of the fintech journey of companies there recognizing what succeeds. But I almost think that you're right, that there's been a hell of a lot more, particularly in the capital market space, a hell of a lot more companies getting that sort of traction to go from that seed through to Series A through to Series B sort of journey, where there's been a lot more noticeable success of companies in the marketplace at the moment. Is that something you've seen? I mean, you've been on 2 or 3 of these journeys already in your career, and have lived through that. Is that something you see? Is it is this iteration of your entrepreneurial journey different from the first one in competition wise, or
the principles are the same? It feels different.
Yeah.
There's a lot more money out there. It's much quicker to develop products, which means there's a lot more companies out there. But I think that the need to continuously innovate is much more compounded, that people can play catch up very quickly. You have to figure out what is my differentiator and how do I continuously invest in that, because with cloud, I can set up companies in a much quicker way. And it's funny because I find that because technology is easier to generate, you suddenly start falling back on a lot of things that are old school. The trust of the industry in me, the trust that I understand what the industry needs as far as data protection and data sanctity and data understanding. So yes, I'm going to be absolutely grilled through InfoSec, and people want to understand the technology and go through the tech, but they also want to know that I have an understanding of how the industry operates. And that human factor, in a way, is kind of doing a full circle. It was like, we can automate everything, but I've got so many of those. Now I'm looking for that differentiator. I think there's a human factor that's very, very important with regards to vision, with regard to trust in the industry. So the balance is changing. I think, there's more competition. If I'm a bank and I've got 5 different vendors offering me similar solutions because they can all generate it really quickly, I often sit on the fence and I say, one of you is going to win and the other 4 will disappear. I don't feel like investing the time in the wrong one, so I'm just going to sit on the fence and see what happens. And I think that's the place where fintechs really struggle. The time to close deals take longer because of the proliferation of solutions. And now you have to figure out what makes you more likely to succeed than the others, not necessarily just purely based on the tech, but based on the understanding of the dynamics of the industry and being a kind of a trusted partner to the people who want to change. So yeah, I mean, it's still about, you still have to go and sell, but you bring up some of the old human touch and the new technology, and it's just the mixture continuously changes. How much water?
You know what, that I think is really the crux of it, isn't it? You're talking there about, and particularly when you mentioned there about the automation of everything. You know, there's suites of very bespoke products that people can put in there to give themselves the ultimate trading advantage, and you know that becomes a very, you know, bespoke solution for, you know, for everyone in there. They can look at one thing rather than having some sort of legacy technology plonk in front of them and make the best of that solution and find the shortcuts that allow them to get that advantage.
Yeah.
I think it's a really, really interesting thing you've said there about the sort of verbalizing of your USP and how you become inevitable to a company, irresistible to a company. But also that side of things of where you've talked about the constant innovation of a product and that iterative process to say, this doesn't have to be the one thing that you have, and this is our product, and you have to eat it because this is the way we do things around here. You go into it and you tailor the burger to your taste, effectively, don't you? You say, do you want the pickles? Do you want the mustard? Do you want the ketchup? Do you want the special sauce? This is something here where you can sort of design it, and you're working with them and you're listening to your customers. I think that art of customer listening, and again, you come back to the important part there of pure technology-based fintechs versus fintechs that have got that business mind to it as well, to understand the business as well as the tech and the tech advantages. That to me is a massive, massive differentiator, and something there which creates, you know, advantage and volume and progress for the companies that I've been talking to on a basis over the last couple of years.
Yeah, listen, I think I'll go back to us. When we thought about what we do differently, we honed on the fact that a single bank's data is not as valuable as the blended data, but you can't just do it and say, hey, guys, do it together and mix it up. I need to put the right controls and the right protection and the right security so that people can dial in and out of how much collaboration they want to do. And when I feel I've got the control and the collaboration, I'm much more open to doing it. Now, I'm saying, listen, you have the ability to do that. Let's see what the benefits of collaboration are. Cost reduction, fail management and reduction, capital relief. There's all these great things that come out of the fact that, hey, the data now is better than it was before. But the hurdle was, do I really want to blend my data with my competitors' data? Well, it's not really blending. You still have your own. It's just enriched, and you find the story. And a lot of the infrastructure was about data protection. Now you take the technology and you just have to tell it in a story that resonates. But yes, we have become, and I'm not sure we said it day one, but we've become that trusted place that I can go to collaborate with others to make my data better than it was before. And then I get service and all the good things that come out of it. And now it's about repeating that story and making sure that people understand why I am that place that can unlock all these values, because I've figured out the problem set that you have, the fundamental problems that you have is data control. That's what I need to fix.
Yeah. This is again is another conversation that seems to have hurtled through half an hour, and I feel like we could be talking for another 10 of them and not even get to the bottom of everything, which is why we keep having you coming back on the show, Roy. Every single time it's an education. Let's finish off just by talking Access Fintech. As we say, it evolves so quickly, and you guys are achieving so much at the moment, and the growth has just been phenomenal to watch. A business that's spread all over the world now, with interesting challenges in every one of its locations. There's always something going on to test you and see different things. And in spite of all of that, it continues to go from pace to pace. Tell me what's on the radar for the rest of 2021, what we can expect to see, and tell us your plans for the year ahead.
Startups grow in spurts. It's almost like kids. Suddenly the trousers hit the ankles like in 3 days. Like, how does that happen? It's like, that makes no sense. It's like, how do you grow so fast at such a spurt? And it's the same with us. The growth that we have has been in those spurts, and we're about to hit the next one. So at the beginning of this year, we've decided to move from evangelical sales done by a couple of the early initiatives to create a sales organization, which is a change, right? We still want those fundamental relationships But I now suddenly am talking about managing 40 or 50 or 100 relationships. I need a different kind of organization. So we go through that activity. Running and preparing our finances for the Series C that's coming up is different than what we were doing. Initially, it was about cash preservation and managing our own. Suddenly, I need to talk about, well, what does the future looks like and how do I prepare those activities? It's a slightly different DNA. So the company is constantly evolving. And every time you grow, you realize you've shaken up a bit of the organization. Now I need to kind of go back in and say, okay, what have we broken? How do we mend it? Then get ready for the next spurt. So I feel like we're on the verge of the next growth spurt of where we are from a headcount perspective, from a client perspective. I always look at the number of clients as the metrics of when do I need to grow again, less about revenue, because the size of deals and everything, it blends it. But when I look about the number of relationships that I have, that for me is the metric. So we're getting to that next evolution. Now we're talking about, again, tens and hundreds of clients, not talking about twos and threes or 15 and 20. It's just a different company. So now we're doing the next growth spurt. It coincides with a Series C that we are working on right now. So yeah, the company's growing. It's growing.
That's so exciting to hear, isn't it? And that it seems like weeks ago, days ago, that you're announcing Series Bs and all that sort of thing, and to get to the sort of big boy trousers phase that you're getting to at the moment, to go back to your growing pain sort of thing. It's just wonderful to hear it. Look, I've said it earlier on in the show, and I don't mean to be too sycophantic here, but it's just always massively energizing to have you on and to hear about the journey. I love seeing companies succeed and grow and do things right, and there's pearls of wisdom every time we're speaking, Roy. So listen, lovely having you back on the show. I'm sure you'll be back on in the not too distant future again. It's been great to talk as always, and really excited to the next phase and how this the Series C goes as well.
The great platform. I really appreciate the opportunity. Now I'm going to scratch my head and say, what did I share that I shouldn't have said, just because you lure me into talking so much?
Do you know what? I've had it before where you've texted me at 3 a.m. and needed a little bit of editing, but I think you've been clean enough on this one, Roy. We should be fine. Listen, get well soon as well. I know you sat there with an ankle in plaster, and you've been very brave to come in here against all the odds to still be speaking despite being laid up. So it's an absolute pleasure having you on the show, and I hope everyone's enjoyed the conversation as much as I have. We will see you soon on another episode of Fintech Focus TV. Thanks a lot, everyone.
Thank you.